Welcome to Business Middle East. In this edition, we look at the Chinese economy and its expansion into the Middle East. The latest data has shown that growth in China has slowed to its slowest rate in the past 25 years. Despite the slowdown, China is still a steadily growing economy and has become the world's largest importer of crude oil, almost a third of which comes from GCC countries. China and the Middle East have a win-win partnership where they recently increased the proportion of a trade exchange. Beijing considers the Gulf region the most attractive destination for its export market. Could this be effectively paving the way for a modern-day Silk Road? Here is the story.
China's growth dropped to its lowest point in nearly a quarter century. The data showed China's economy slowing despite a rise in policy easing programs. According to the International Monetary Fund, the Chinese economy grew 7.4% in 2014, and the most recent forecast is 6.8% for this year and 6.3% for 2016. In light of a slowing economy, the People's Bank of China announced that it would reduce the rate on a one-year loan by 0.25%. This is the second interest rate cut to take effect this year. The Chinese yuan rose against the dollar last week after the central bank set the yuan's average price at its highest level in 15 months. At the same time, renewed efforts were made to get the yuan into the global currency basket. The energy sector reached a record level, putting China at the top of oil-importing countries, surpassing the United States. Chinese Customs Administration data showed that foreign purchases of oil hit a new record high at 7.4 million barrels per day last April, and in doing so passed US imports that amounted to 7.2 barrels per day. A third of oil imports come from the 6 Gulf Cooperation Council countries. Over time, China has increased its presence in the Middle East in a range of ways. And recently, Beijing announced its intention to advance free trade talks with the GCC.
To gain further insight on this issue, joining us from Hong Kong is Mathieu Ghanem, market analyst and head of sales Asia Pacific for ADS Securities. Mathieu, it's a pleasure to have you with us. The latest Chinese economic data is significant. Do you agree with analysts saying it's a hard landing?
Hello, Daleen. I do not agree. The Chinese economy is currently in a mutation period. It has reached a certain level of overcapacity, true, especially in the industrial and real estate sector. And this, combined with the intervention of the government to cool down the shadow banking, is resulting in what we believe a soft landing, so a healthy rebalancing for China. We still believe that this year the PBOC, the Chinese Central Bank, will manage to reach its target of 7%.
What are the expected trends for the yuan now? Could the yuan gain the reserve currency status?
Yeah, so though in a deflationary environment where oil prices remain weak, we've seen the PBOC, which is to allow its currency to appreciate to export its inflation, that they have decided to continue to appreciate the yuan or simply because they want to liberalize their currency. So we think that the yuan is already an international reserve currency and it's used by many central banks already. And we expect this trend to continue as China will keep on pushing this year to have the yuan being adopted by the IMF and the SDR to be one of their currency.
China has become the world's largest importer of oil. Do you believe that their recent activity and stockpiling of crude oil could affect market prices?
Yes, Daleen. With still high growth prospect and weaker oil prices, it seems very logical for China to increase its purchase of crude oil. It's a good time and cheap time to buy. However, with oil supply from both the OPEC and the US shale drillers set to expand this year, we don't think that China can effectively or strongly impact the prices. In addition, with possibilities for the US dollar to resume its bullish trend if the US economy outlook becomes better in third quarter, as we think, we don't think, again, that China could tremendously affect prices.
The Middle East is opening up to China. From your position in Hong Kong, how do you see the two ways investment partnerships growing?
We are witnessing this every day in Hong Kong. We are, Abu Dhabi-based company, highly committed in Asia with growing human capital, investment. I think as a whole represent a no comparable opportunity for GCC economies. And as you know, this is not only, I'm not talking here only about the commodity business, but in the financial business too. As Asia became the main engine of growth, we at ADS seen and help structure many investment deals where GCC countries are investing massively in China and vice versa. And this is to secure market share for both countries and both regions. Finally, and to conclude with this, we think that this free trade partnership discussions between China and the GCC looks very bright for our common future.
Thanks, Mathieu, for this insight.
Thank you.
That's all for now. For more business news, you can always visit Euronews Business YouTube channel. Thanks for watching and see you next week.